Hey there, fellow trader. Cecil Robles here, and happy Monday. I want to give you a quote that I once heard that I think as a trader it's imperative to live by. And it goes like this. It says, to live a truly creative life, we must lose our fear of being wrong. You know, as a trader, that is something that you must live by. You cannot be afraid of being wrong. You're going to stifle your creativity when it comes to analyzing the market, finding and looking at good trading opportunities. You can't be afraid of being wrong. That's why I put out my opinions in these daily videos, because I'm not afraid of being wrong. If I'm wrong, I know that I bet enough to where it's not going to kill me if I lose in that particular trade. So it's imperative that you live by that, especially in your trading endeavors. You must not be afraid of being wrong. So with that said, I'm going to make a pretty bold prediction here, and I could be wrong, but that's okay if I am. I don't think I will be, but that's okay. I want to talk to you today about where the market is heading, the overall market. I've got the S&P 500 index chart pulled up, and I've got it pulled up on the weekly chart. And I once heard a saying by another famous trader, and he said, the farther you step away from a chart, the clearer things become. What did he mean by that? He simply meant the more time you can see in that particular chart, the clearer the chart becomes, or the clearer the trends, or the clearer the patterns, or the way the market moves becomes. It moves in waves, it moves in cycles, right? So we've got to look at that from a longer term perspective, and we do that by backing the chart out, looking at a much broader time. And I'll point out a few things in this chart that may shock you, and you might be saying, you know, well, I don't think the market's going to do that or whatever. But let's just look at what we see here. We can see the two latest market crashes that we've had in the last 15 years came right after the tech bubble of the 1990s right here in the year 2000. You can see 2000 on into 2001 and all the way down to 2003 is where this lasted to before it finally turned around, rallied up till we got about to 2008, and then of course we had another major market correction, big crash right here, the crash of 2008. Now we're here 2015, and we've really got very similar patterns moving here. We've had big runs up in the market. If you look here, the 2000 crash, you can see this market ran up enormously, right? All the way from 1994, all the way 1995, all the way up to the year 2000. And then obviously we started to see a top form right here. The market came down. The next one, we had a nice run back up, all the way back up to the highs from the 2000s. And of course, that's when 2008 happened. We had another bubble burst and the market crashed. It actually dropped further than the last time. Now, if we measure these two market corrections or crashes, whatever you want to call them, if we measure these, we've got about 800 points right here in this particular market. And in this next one here, we've got about 900 points. So 800 points and 900 points. All right, so the rough average there is about 850 points. Okay, now you can see we've had another nice big run up in the market. We've had a few small corrections in there along the way, but primarily it's been just a nice smooth run up in the market, especially after this last correction. The market has been moving up here up to, you know, 2145, all the way up to 2145 nearly, you know, over the last few years. And so we've seen a really big run over the last few years without a major correction. And all the way back really since 2009, we've seen this market start a bull trend, right? Well, look what's happened here. Now that we kind of expand the chart out, you can see that prices dropped through all of these indicators here that we have on the chart. We've got some moving averages, a 50 exponential, an 8 exponential moving average, 5 exponential moving average, and then we have our fractals and our fractal average breakout indicator. And you can see during all of those times, you can see that the market moved through all of that very quickly. Moved through all of that very quickly. Moved through all of this very quickly. Down here it did too, but we did have some reversal signs or signals that the market was going to continue up right there, and that did happen. Here, if we expand this out, we have no reversal signs or signals here yet that the market is going to continue up. As a matter of fact, if you look at the last weekly bar right here, as I expand this chart out a little bit, if you look at the last weekly bar, this is actually hitting support or resistance up here in this area, as you can see, hit right off of our lower band of our fractal average breakout indicator, and then just dropped right down and created a big hammer, on this particular time frame, the weekly chart. That's pretty significant. If the market drops below these lows of 1941, then we're probably going to see another leg in this down move, and that's my prediction in this. Now, this has crash potential all over it right now, as you can see from, once again, the last two times. You can see here, if we just take the average, 850 points is about right here in this area. Now, where did that come down into? It came right down into this major support level right here in this area. The last time we had a big push down, right here in this major support area, came right down into it. So 850 points is not an unheard of correction in here, and that means that we could be trading all the way down to about 1,300 roughly. And that's my prediction for this particular market, if indeed we do see a continued downward pressure here. And I think that is what's going to happen with the Fed's decision last week of not raising interest rates. It doesn't look like in the near future, at least in the last quarter of this year, that's going to happen. And of course they wouldn't raise interest rates. Look at what happened to the market. The market got spooked. If the market drops all the way back down to 1,300 here, what are they going to do? They're going to have to put more stimulus into action, keep rates low, put more stimulus into action to try to pump the market back up again. And it's a never-ending cycle, and that's why this could be literally considered one of the greatest bubbles of all time and of all history. We may go beyond that 850 or 900 point level. But nonetheless, I do believe we're going to still see a major correction here in the market. So what's a trader to do if you're trading in the stock market? Well, you need to be looking at doing some put options on, probably, all the large cap stocks do put options. If you're looking at the market as a whole, the S&P, of course, put options again. That's definitely my take on that. Also, divesting into Forex. And I want to show you this because during the last major crash, 2008, I want to show you what happened in the Forex market and the kind of potential that you would have had in that last crash of 2008. Because the reality is that it's much easier to short the currencies than it is to short, let's say, the stock market for many of you. So in the currency market, the 2008 crash that we had, you can see here we had a nice run up the dollar. This is the euro dollar pair, and then look at how this market just dropped during 2008, during the crash of 2008. When the market was going down, the dollar was gaining strength. Obviously, people are taking the money out of stocks and investing them into the safer assets such as cash and bonds. The last crash, bonds didn't work very well. But you can see here that that the US dollar did gain enormous strength against the other major currencies in the world. This is just one example. There are many examples. And so you can see right here, boom, we had a major price drop. If we look from the top here to the bottom of where that was, that's 3,714 pips. At just one lot size, you're looking at a $37,000 profit, a little over a $37,000 profit in about 23 weeks if you caught from the very top to the very bottom. So with that said, I mean, let's look at where we are right now here in the euro dollar. I have already done an analysis on this, and so far the analysis has actually panned out pretty well. As you can see, the market has been dropping this week And if we go down to a lower time frame like the daily chart, you can see that the market dropped pretty considerably here. And I'll just get rid of this for right now. The market dropped pretty considerably here today. And on the 1 hour time frame, my analysis was actually pretty spot on of what we needed to be looking at today. And I hope you were able to take advantage of that. But you can see the market pulled right back up into this area here. Didn't quite get back up into the low, or this low of being broken right here. Didn't quite get up into that area. We got back up into this kind of structure high there. And we also kind of got real close to our lower band of our fractal average breakout indicator. But we did have a massive reversal signal here on the 1 hour chart. And that was with this long candle, very bullish candle. It's an engulfing candle and it's a bullish candle, and it closed right at the very bottom. We would have been able to sell this market with a tight stop loss on the very next trade, and we would have had an opportunity to profit all the way back down to this 112.11 area like I had talked about, and even further. The market did go beyond that, but if we took a short position in that, let's just look at, and I did take a short position in that, but if we look at taking a short position here on this candle and putting our stop loss above the high right up here and our target down here at that 112.13 area, look at that. We've got a 2.29% reward, or 2.29 time reward to risk ratio there. So that was a very nice trade there. Now, what are we looking for? Well, we're simply looking again for price to drive back up into this area. Let me just get a trend line tool here, and we're looking for price to drive back up into this area right here, and then we're looking for price to go back down and make newer lows. That's what we're looking for here. So once again, we need to be looking for somewhere around this area, between here and here, somewhere around there. We need to be looking for reversal patterns again on the 1 hour chart and selling that market again. Why? Because we're going with the direction of the overall market at this particular time. Now, if that happens, what's a good target area? Well, pretty simple. All you have to do is pull a fib retracement. I like pulling fib retracements. You pull a fib retracement right back up into that area, wherever it turns around at, and you can see the 127.2 or the 161.8 back down into the 1122, somewhere around there, 1154 and 1122. And that's a nice reward to risk ratio trade there if that ends up happening. So that's what you need to be looking at on the euro dollar. Pound dollar setup also has been very nice. If we go to the daily chart on the pound dollar, you can see that we once again had a nice reversal here on the daily chart. Price drove back up into these this structure resistance here, this high right here, or this low right here rather, of this reversal, and we're looking for price to continue down. So this could actually be a very nice continuation, and if this all lines up with the overall market crashing or having a much larger correction than what we've seen so far, then we could see price drive down considerably. If we pull out to the weekly chart once again and we go back to 2008, the last time the market had a major crash or correction, you can see here what happened there, and that was even a much larger move than the euro dollar. Here we had about a 7,598 pips. That's $75,000 just trading one standard lot. And so we could see that here. We could see a major move down. Now, we've already had a pretty big leg down here. Price is moving up, so even if we didn't get near half that correction, we could still see a major correction down. Back into these lows even would be a couple of thousand pips here from where the market is right now. And so we're looking at being able to pick up on some major opportunities here if this market does continue lower. So where can we expect this market to go in the medium term if we're looking at trading the daily chart, not necessarily the weekly chart? Well, right down here into this 161.8 looks pretty good to me. Back down to the 148 level right back down into these lows again is where we can look at this market to go if indeed it does continue its downward movement. So once again, don't be afraid of being wrong in your analysis. That's why we put a small risk on every trade. That's why we use proper risk management. And if we're wrong, we just simply go on to the next trade. I've been wrong. I've been wrong the last couple of months a few times. And these last couple of months have been up and down, kind of a little more difficult, a little more volatile. But I do think we're coming into seeing some major market corrections, which is going to provide some major trending opportunities. Currencies are easy to trade to the short side. Very, very transparent as far as the ease of getting in and out of the market. There's a lot of liquidity, so it's a great investment during these particular times to be able to take advantage of this. Take your money out of the stock market, or look at using put options during this time if the market does indeed continue to the downside. All right, hope you enjoyed this video. I'll see you in the next one.